Good morning, everybody. Happy Thursday. It's February 1st, 2024. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. We do these every Monday and Thursday morning, roughly around 8:30 to 8:45 Eastern Time. Talk a little bit about the markets, a little bit about the economy, anything that might have happened the last couple of days, what may be happening in the days or weeks ahead. Kind of get a little bit of clarity about how to trade this market. So let's talk about things. So the markets had a rough day yesterday. S&P 500 fell about 1.6% on the day, and literally cut in half the gains that were being posted from the first days of January. Yesterday being the last day of January, we were up about 3.2%, and the monthly figure came out to be about 1.5, 1.6%. So cut in half one day. That was a lot of selling that ensued yesterday, and I'll show you that on the chart in just a couple moments. But the Nasdaq also down. Russell 2000 down 4% for the month of January, which is a pretty startling number for 1 month. But we know if interest rates come down and especially on the long end, we'll see a resurgence of small cap stocks. But for right now, it's all about the big cap names. S&P 500 hit a new all-time high the day before yesterday, retreated a little bit yesterday, again about 1.6%. Dow Industrials were up most of the day, but finished actually with losses as well too. So we'll see if the markets can recover some of those losses, if not all of them. Today, Nasdaq was down almost 300 points, close to 2% on the day on Wednesday. So again, we're trying to bounce back a little bit here today. Nasdaq up about 100 points. S&P 500 futures up about 21. Dow up a little bit over here, getting hurt a little bit this morning from weak earnings from Honeywell. Altria also came out with earnings. Merck actually came out with strong earnings and actually beat today. Those three are Dow Industrial stocks. And also tomorrow we'll have Chevron and Exxon coming out, AbbVie in the morning, Regeneron, Charter, SIBO, Granger, and Aon insurance company. So still lots of more stuff coming out. And oh, by the way, don't forget tomorrow, jobs report, right? For labor report coming out for January. Expectations are let's see here. Tomorrow, I believe it's about 120 to 130,000 on the. Actually, no, 187 is the estimate. Private non-farm payrolls 155. Of course, yesterday we saw the ADP report came in as a disappointment. They're looking for unemployment rate to tick up to about 3.8%. I wanted to show you though some good economic data that came out this morning. And that was productivity and unit labor costs. So here we go. 3.2% on the non-farm productivity, which was supposed to be coming in at 2.4, down from the prior quarter, 4.9. Unit labor costs up a little bit as well too, 0.5% less than the expected number of 1.3%. Still hotter than the prior quarter, which was down 1.1%. So what does this tell us? This tells us that a small incremental increase in inflation with unit labor costs, but the economy in the fourth quarter grew organically with a nice productivity number. Labor productivity was basically driving the performance in quarter four, which we saw came in at about 3.2, 3.3%. So when you have the productivity driving the performance of the growth in GDP, that's a huge positive for the economy, right? It's not being driven by higher prices. It's being driven by more production, more products being sold, more products being built here in the United States. So that is a huge positive for the economy. As it relates to the stock market, remember the stock market is a discounting mechanism. It discounts the markets, the economy about 6 to 8 months out in front. So this number really isn't correlated much with the stock market, but we can be sure that the Fed, which can reconvene their meeting Tuesday and Wednesday, are seeing this number, and they're very pleased. The fact that the economic growth is being driven by productivity and the economy is still very, very strong. Okay, so that's that. Let's talk about the futures here, up a little bit this morning. Later on today, we'll have earnings from Apple, Amazon, Meta, Atlassian, Deckers, Skechers, and Microchip, along with a few other names as well too. So this is a big night for earnings, especially with the top three: Amazon, Apple, and Meta. These three names are going to move markets tomorrow and for the foreseeable future. Of course, we saw a poor reaction to earnings yesterday from Tuesday night's display of names coming from Microsoft, AMD, and Alphabet and Google. All three of those names were down sharply. They're recovering a little bit this morning in the pre-market. I see it looks like Microsoft's bouncing back about $4. Remember, it was about 410, 411 when it closed on Tuesday night before the earnings came out. Google, Alphabet down sharply. It was about 155 or so. AMD was about 177. It's down. It actually went down in the 150s. It's bounced back to about mid to high 160s now. So we can watch those names. We can take a look at those names. But frankly, those stocks, when they get pounded like they did, are in need of what? They're in need of a base building period, right? And the base building period means the stock's probably going to find a bottom and then eventually find a top and trade in within that base for several days and several weeks, right? It is a time for us not to be participating in those names. You can trade the ranges, sure. It's very difficult. It's not my game. For some of you who trade momentum like I do, you probably just want to stay away from those names for now until they exhibit some breakout moves, higher highs, higher lows, and are in an uptrend, or lower highs and lower lows and are in a downtrend, and we can trade them to the downside. So we got to pay attention to the ranges and pay attention to the bases that are being built over here. You don't get into a stock or a name when it's trying to build a base, right? When you can buy the stock, of course, if the lower end of the base is strong, and start accumulating shares. But if you're going to trade it, you got to wait for the stock to start making a move upwards and breaking that base, either to the upside or the downside. Little tip for you. We saw earnings last night from Qualcomm, which were kind of mixed. I thought the guidance wasn't great, but the earnings were good. They're down about $3 here in the pre-market. Norfolk Southern news coming out. Some companies come out with a big investment, $1 billion investment in them. And Etsy has interest from Singer from Elliott Management, and they're actually up sharply, up close to 10-12% in the morning. So we'll see how that one rolls. I want to show you a couple other things as well too. I tell you I wanted to take a look at the S&P 500 chart, and you can see here what I've marked in here is the level of support that we think that the market could come down to if we continue to correct a little bit more. The S&P 500 finished on its dead lows yesterday. Where's this level over here right now? Let's call it about 4805 to 4808. 4807 and change is the 20-day moving average. But this is an area where the stock market broke out in the middle to late part of January, made a run up there to through the upper Bollinger Bands, caught a doji on Tuesday, and a big sharp gap down over here. Again, we could come back down to this area over here in the next few days, and we'll see what happens. We noticed that back in January, that the 20-day moving average held nicely, held firm on a couple of different occasions. And so I suspect that we could come back down and test that area. That's only 1% down, folks. So it's only 1% down to about 4,800 and change. Maybe it'll happen today, maybe not happen today. It looks like it's a risk-on day today. So, play the markets as you see fit here, and as the market is giving you information here about how things may proceed today. Right? We don't know about tomorrow, and we don't know about Monday, but for now, it appears that it's a risk-on day. So, maybe we want to be looking at taking some positions and taking a risk-on approach here. I will be evaluating things all day long. Volatility is starting to recede here after popping yesterday. I also want to share with you my good friend Tom McClellan does the McClellan report, and you can see that the oscillator over here turned negative yesterday, right? And what it left was a simple pattern above here, which means that the bears are still in control here if this current pattern holds. Now, yesterday we noticed that the breadth was pretty bad for most of the day. It wasn't great even in the beginning of the day. It was still negative, and it got super negative towards the end of the day, because you can see the decliners were 22.27 to advancers on 6. So that's more than almost 3.5 to 1 decliners over advancers. So that AD line went down sharply here. So we're seeing that this advanced decline oscillator correcting a little bit more. We've seen recently seeing put call ratios on the rise as well too. So these are clues that the market is either starting a correction or getting ready to pull back here. So what would you want to do right now? You'd want to take some risk off, right? You want to take some risk off the table, take some losses off when the markets are up, maybe like today. Take some gains off the table and keep some cash available for whatever the next move is going to be. All right, that's simply the way you have to play this market these days, right? If you're going to trade it. All right, that's that. And I'm not really looking at very much right now. I do have some positions in Meta. I think this is going to be a good earnings report tonight. So I'm going to be probably going to be adding a little bit more risk on Meta. I had a terrible day yesterday, but I think this stock's going to make a good move post earnings. I do have some Amazon positions on as well. I'll be looking at. I do have some Exxon. They have earnings coming out tomorrow morning, and a little bit of AbbVie. I like that chart as well too. So I think it's going to be it, everyone. Have a great day, and good luck with trading. And if you were at the webinar yesterday, the Intro to Spread Trading webinar with myself and Sam DeMarco, it should be available on streaming on Twitter, on LinkedIn, on Facebook, and also on YouTube. So go to the YouTube channel if you want, and you'll be able to see that there. Let me show you where that is. So you can see here, there's my old cat. You can go on over here. You can see Intro to Spread Trader right here. You can see that right there. So you can go through the slides here that Sam and I put together, and there's a huge, great, really super nice offer at the end over there for a buy one get one free. Where is that? It's right here. So you can get the Spread Trader BOGO right here. I will put that up in the Twitter right now, and you guys can check that out. 1 month for $109, you can get another month free. So it's basically $55 for each month. So it's a great deal to get involved and see what Sam is doing. So I encourage you guys to take a little bit of time, take a half hour, 45 minutes to listen to the Spread Trader program webinar that we did yesterday. We're going to do another one in February, on February 28th as well. All right, everyone, have a great day. Good luck with trading. And if you're in the chat room, I'll see you there all day long. If you're not in the chat room, that's the place to be. Come on over, and we'll see you guys on Monday morning. Enjoy the day, enjoy the weekend, and good trading to everybody. And I'll see you guys all on the other side. Thanks. Bye. I found an island in your arms, country in your eyes.